Good morning, good afternoon, good evening. Welcome back for another video. I sometimes am able to look at my demographics. I don't know if any of you are in the Ukraine or if you were affected by this, but by any chance, if there's anyone listening from the Ukraine, I want to start out by saying that you are in my thoughts and prayers, and that I hope that you are able to keep yourself safe and that you're doing well. Otherwise, I just want to go ahead and dive right on into this. And I had to make a video today, right, guys? Because it's like, I still, I'm not in the 24-hour news cycle. I've talked about that a ton. I still am not quite able to grasp the significance of this moment on a global scale as far as where are we going from here? Where do we go from here? And because of that, sometimes a lot of the time, I do think that that's an advantage to not be immersed in this news cycle. And maybe now I might be willing to admit it's a disadvantage, because a lot of my peers, a lot of people that I follow, whose opinions I respect, it seems like the weight of this is much heavier on them than it is on me. And not to discount anything, but just to say, maybe this time it has been a little bit of a disservice to me to not be fully immersed in the news. I mean, we'll see. I'm not willing to admit that fully yet. We will see how this plays out, whether it's World War III or whether it's just another really loud thing in a series of loud things. But as far as price action is concerned, there's only one answer that I think is the correct answer to give right now, as far as where Bitcoin is going, where Ethereum, other cryptos, the stock market. I don't know. And I think anyone who is honest right now would say they don't know. If you were to watch a video of somebody who has all the answers, and anyone can present scenarios, and there's scenarios that I want to play out for sure. But as far as saying, could we do things that we've never done before? We absolutely could. And what are those things that we've never done before? Well, Bitcoin going back to its previous cycle top. I don't believe that's going to happen. I've made a case for that over and over again. It's never happened in Bitcoin's history. I think that there is enough interest in cheap Bitcoin that people will buy those dips aggressively before we get anywhere near $20,000. So a weekly close below $30,000. Right now, personally, I don't think that is in play. But what happens if we have a scenario where our worst fears come true? Not just Ukraine's worst fears or Russia's worst fears, or the United States' worst fears, but globally on a macro scale, worst case scenario. I mean, sure. There's that famous Einstein quote, I don't know what World War III is going to be fought with, but I am pretty sure, something like that. I'm convinced that World War IV is going to be fought with sticks and stones. Am I being too dramatic going in that direction? I don't know. I don't know. My tendency is to think that we are not going to have World War III. Let me just throw that out there. I do not believe that this is going to lead to World War III, but maybe I am just uninformed. But all right, speaking of price action, guys, there isn't a historical, however you put it, precedent for the time that we are in right now. And it's a combination of things, right? It's not just Russia invading the Ukraine. I think if it was just that one thing, that would be one thing that we would be able to process and think through on a certain scale. But it's inflation, it's fiat currency doing the things that we've known for years. I think a lot of us have known for years the things that fiat currency is going to do. As we remove our currency, as we transition from hard money from sound money to unsound money, that this isn't a surprise. So it's not just the war, it's inflation. It's inflation of the dollar, it's inflation of other currencies. It is 40 years of, at least in the United States, consistently lowering rates, anytime making an attempt to increase rates. We have things like the 1987 crash, the dot-com bubble crash, the real estate crisis in 2008. We have so many things, the early 90s, some things, very poor economic conditions at that time. And anytime we tried to raise rates, we could just go right back and go back to where we were, but then continue to lower rates again. And now rates are at zero. So where do we go from here? Do we go up? Every time we've gone up for the last 40 years in interest rates, it's been pretty, I don't want to say disastrous. That's too strong of a word, but it's been pretty bad. So, guys, yes, we are in really bad shape. We're in really bad shape. But the question is, how long can we keep this house of cards standing? Because there's one thing that I maintain. There's so many people who, once they get into crypto or Austrian economics, things like that, they get dark really quickly. And I was one of those people in 2010. I didn't know about Bitcoin in 2010, but I was one of those people who just thought, I got into a little bit of an understanding of how the world was working at the time and is working today. And I got dark quickly. But one thing I've learned in the last 12 years is that we have been able to keep this house of cards standing much longer than I've ever imagined. I thought for sure by 2020, if you asked me in 2010, if we would see some kind of massive crash by 2022, I would have said no doubt at all. But here we are. And do we have do we have bullets in our chamber or whatever we want to talk about to keep this house of cards standing longer? We might. We honestly might. And so, it's so funny. So, I mean, I was talking about 2010. I watched the movie Wall Street by, Wall Street with Michael Douglas and Charlie Sheen. And it's funny. There's this scene in there where this is 1985, I believe. And one of Charlie Sheen's coworkers is complaining. There's a scene where he's complaining about going off the gold standard and how much of a disaster it's been ever since then. This is 1985. I mean, give me 1985 over 2022. And so he got dark in 1985. And here we are. We're still standing. We could still stand for another decade. We really could. But, I mean, I don't know. So all that to say, there are some really bleak scenarios that we could all imagine, or, in my heart, my fear, the level of fear, whatever you want to call it, I'm not super afraid right now, but the level of fear that I would say that I have is in disagreement with where my head is, which is to say that I don't think disaster is going to strike. I know I've been just talking the last few minutes about all these disastrous scenarios personally, and you've got to dig deep personally for yourself to figure out, where are you risk wise. I don't believe that. I believe that we're going to wake up and see another day tomorrow and the day after and the day after, et cetera, and we will be okay. I don't say fine, but we will be okay moving forward for the time being. And yes, do I believe there will be an epic crash one day? Yes. And what does the recovery from that look like? I don't know. But moving forward, short term, medium term, my hunch is to say, you know what, I don't think this is going to blow over into something cataclysmic. All right, and so where do we go from here? Let me share this with you. By the invasion, so here's some things, how things have played out. This is the S&P 500. We have the Vietnam War. If you bought the invasion, you would have done very well. The Gulf War, 1991. Buy the invasion, you do very well. And notice also the dip before the invasion, the fear that came before the invasion, and what a tremendous buying opportunity that was when the invasion came. Buy the invasion. Gulf War, by the invasion, at least, short-term Afghanistan war, by the invasion, Iraq war, Crimean crisis, by the invasion. There was certainly, you can see the fear in the charts. Look at the fear. You can see the dips or crashes right before the invasion, and then you can see a rise. And if this doesn't blow up into World War III, then in my opinion, the chart is going to look very much like this, at least for the S&P 500. Now, if this does blow up into some global conflict, then all bets are off. It's just, again, there isn't an historical precedent for a time like right now, in the sense that, World War II, we can't really compare now to World War II because we were coming off the heels of the Great Depression. I mean, that was all throughout the 30s. And then, so anything in comparison to the 30s looks like improvement. And so, yeah, World War II, World War One was too early. I'd say anything before the Roaring Twenties, before the creation of the Federal Reserve in 1913, or I know that World War One was right after the creation of the Federal Reserve, but that just wasn't enough time. So we don't have a real precedent to understand what a global conflict would look like for the stock markets. So in the meantime, and for crypto, obviously for crypto, in the meantime, I think that this is as good of a guide as we're going to find. And so we'll see. Yeah, let me see what else I want to talk about. So how much potential does it have to be with World War III? I mean, the last thing I even want to say is it seemed pretty clear to me last night as we were seeing the prices dump really hard on the news that we had this invasion, that Russia had invaded Ukraine, that it seemed like a pretty obvious shorting opportunity. And it ended up playing out that it was a good shorting opportunity. We went down to like 34,300 or something like that. I was talking about, I shared this in the Discord. Link to the Discord in the bio, I believe so. Join the Discord, would love to have you. It seemed like that was a good opportunity to short. And if you did open up some kind of short, I hope that you then took some profits. But as far as today is concerned, I'd say we're holding up pretty well. I mean, wouldn't you? I mean, we're at $36,000. We went down to 34.3. We're back up. Now we're in this uncertain time, and what would cause the price to go lower? The invasion has happened. I think that the thrust of that fear is in the market. And so something new would have to come. I mean, I'm hearing rumblings of China with Taiwan. To what extent does the United States get involved in this? To what extent does Germany, the UK, how do they get involved? And if that ramps up, then yeah, there's plenty more selling to be done. We're just going to have to wait and see. But again, 1.618 Fibonacci retracement level. I know I talk about that a lot, and I'm going to talk about it again. Weekly close below $30,000. I still lean pretty heavily to the idea that even with all of this conflict, as long as the lights are on, that the interest, we have passed an inflection point. People know what Bitcoin is and what it is going to be. Enough people know that if they were to see 29,000 Bitcoin, a wick down to 29,000, that they would scoop it up very quickly. But we'll see. Yeah, we'll see. The answer again is, I don't know. I talked about in a TikTok video my strategy moving forward. I'll talk about that real quick. As of right now, very strongly, I would only buy Bitcoin and Ethereum. I am doing some things to restructure my business that's taking a lot of capital away from being able to invest in anything, and I'm very excited and hopeful about that. So personally, I am not buying anything right now, but right now, I would limit it to Bitcoin and Ethereum. Those can hold up; those can stay in the 30s. Bitcoin can stay in the 30s, Ethereum in the upper 2000 range or mid 2000 range, while every other altcoin is bleeding to death. Okay, and I'm going to pull up coin360.com. I just didn't want to see all that red, the blood red on the chart, but here we go, blood red. This is going to be my very last thing, and then I'll be done for today. But Bitcoin dominance, I talked about this in my live stream yesterday. If you didn't see that, I would don't pay attention to Bitcoin dominance. Bitcoin dominance. What happens when you sell your crypto? Let's say you have some Solana, you sell it. Some platforms, a lot of the platforms that I am on, they don't even give me the option to convert that to just regular dollar bills. I have to convert it to stable coins. And so Bitcoin dominance has just been hovering right around 41.5, 41.5%, 41%. But then you see a lot of these coins, they've been suffering pretty heavily in comparison to Bitcoin and Ethereum. And so what's going on is that the stablecoin dominance is increasing. So a true measure of Bitcoin dominance, in my opinion, is Bitcoin dominance versus non-stable coins. And if we were to have a figure, it wouldn't be difficult to calculate, but if we were to have a figure, you would see Bitcoin dominance rising. But stablecoins are going to continue to grow in market share. I just think the appeal with staking stablecoins is very attractive. And so that's going to, by Bitcoin dominance standards, cause Bitcoin's dominance to drop. But I don't factor that in. I don't think you should factor that in. So, all right, that is all I have for today. I would love to hear your thoughts in the comment section. And today's Thursday, right? Okay, so I hope you have a wonderful rest of your week and a great weekend. I will most certainly be seeing you in another video. Peace.